The potential of benefit of FOB are a total control over your freight costs and be able to get exact, and the buyer will remain in control of the shipping costs and arrangement. Why the benefit of sale discount can attract new and repeat customers while increase sales across the board.
Limitation for FOB. Limitation of FOB are potential for seller to mark up local transport cost and charge for the highest unit cost, while limitation for sale discount are the perception of your business quality suffer, and dropping your prices can lead to a price war. For improve the sale and the income the business, I think the company should selling on credit. It is because it will enable people to sell more than what they have, is earning more money, plus it also winning new buyers.
The buyers like trade credit. It is easy way to ease cash outflow, can help improve the business profitability.
Okay, for store supplies expenses, okay, you need to add 10% with 12,000. To increase the profit. Also with same goes with miscellaneous expenses, you need to add 10% with 6,000, and delivery expenses will be 12,000, while selling expenses need to minus 140,000 with selling expenses you need to minus 140,000 minus 12,000, 6,000 and 12,000. Also 132,000 and 600 and 6,600 equal 129 and 80,000.
The strategies can to be used to improve the sale and income of the business is: number 1, cash discount. Is a reduction in the amount of an invoice that the seller allows the buyers. There are 2 reasons why cash discount can be improved the sale and income of the business. Number 1 is to obtain yearly use of cash. Number 2, to offer a discount for an immediate cash payment in order to entirely avoid the effort of billing the customer. Strategies number 2 is credit term. Credit term are the payment requirements started on an invoice. It is fairly common for seller to offer yearly payment term to their customer in order to accelerate the flow of inbound cash. The last strategy is shipping term. Shipping term is the most frequently recommended term of sale. It is because allows for greater control over goods, the freight itself, and the freight cost.
That critiques on the use of single-step statement of profit or loss and other comprehensive income is investor and lender often assess the worthiness of a company on factors other than its net income. They frequently examine such factors as a gross margin and operating margin to determine where most expenses originate from and if the company can sustain its profitability. Without supplying this data, small business can miss out on informing potential investors or lenders of their viability and lose out on opportunity to gain more operating capital. While the benefit of using multiple step statement for improved decision making is, first, offer greater detail. Multiple step income statement offer an itemized breakdown of a business revenue and expenses, categorized by operating and non-operating revenue for more insight into the financial health of the company. Secondly, report gross profit. Unlike a single-step income statement, multiple-step income statement report on gross profit. Gross profit is an important metric because it shows how efficiently a business uses labor and suppliers to generate revenue. And lastly, report operating income. Multiple-step income statement report on a company's operating income, which give insight into how efficiently a company earns a profit from its primary business activity.